Hello everyone, Maurice and welcome to Things Invest, where we talk about investing, finance, and professional development. For today's video, it's purposes only. The investment I'm going to talk about today would be Ethereum and Bitcoin. With respect to both cryptocurrencies and just across the overall cryptocurrencies market yesterday, it was a relatively green day, right? With respect to Ethereum, it was about 3.5% yesterday, and Bitcoin was up about 2.5% yesterday, respectively. And the main driver, as I covered from my Ethereum video that I posted yesterday, is mainly driven by this something that we call the safe haven effect. With respect to the release of the procedures or the process of the tapering from the Federal Reserve that we are anticipating going forward, that have some sort of a negative correlations to equity market because of the fact that, with respect to the quantitative tightening that the Fed is expected to perform on the economy going forward, it will subsequently cut off the cash flow, that's been circulating or being stimulated from this quantitative easing procedure that we've been enduring, right? Which is the reason that we were able to obviously get the stimulus check that we've been getting on a monthly basis, which is the reason why the stock market has been propelling upward, which is why the reason why most corporations hasn't been, frankly belly flop because of this whole detriment from the COVID situation, right? And as a form of safe haven investment vehicle like cryptocurrency, this news subsequently have that negative correlations of propelling the value of Bitcoin and Ethereum upward. However, as of this morning on Friday, because of that whole pump that we incurred yesterday, it seems that we are currently experiencing some sort of like a mini sell-off, right? With respect to Bitcoin, currently down about 3%, and with respect to Ethereum, it's currently down about 4% so far. So I'm gonna go through a technical analysis to see what do we see, these price point going forward from here, right? Are we gonna see more consolidation going forward? Are we gonna see more of a dip going forward? Or are we gonna see more of a surge going forward? Also going to give you guys my price level target for year end 2021 as well. So stay tuned, stick around, let's make some money. Right, so moving on to the technical analysis, and I'm going to go through Ethereum first, and I'm going to go through Bitcoin second. Just to recap on the historical trends, you can see that ever since a couple months ago only, on April 24th, we were at the bottom of the $2,100, and ever since that Coinbase IPO, and also with respect to that Elon Musk SNL debut, his depiction around Dogecoin, and the utilizations of cryptocurrency as a whole, right, which subsequently drove more of like a lukewarm type of sentiment, among investors' consensus, right, and subsequent to that, the balloon basically popped, right, and then the reason that it popped is because one of the corporate investors decided to sell a pretty large chunk of Ethereum from there, right, and that subsequently drove more of a gradual affectations across the market that people start to be scared of, and subsequently we sold off all the way down to, at one point on May 19th, the 1771 level, and subsequent to that, because of the fact that by that point we were extremely submerged under the water on RSI perspective in terms of the MACD, were extremely stretched out, that the investors, both on the buy order system in the computer perspective, but also with respect to retail investors, subsequently scooped that up because we were so below the water by that point that it just needed an immediate rebound, more of a elastic type of perspective, and that subsequently propelled the price to go back up from the bottom of the 1731 or 1750 based on what the chart is depicting here, all the way up to the $2,900, right, which is a relatively big swing. However, the swing was relatively too drastic, right? And I get it because of the rebound. Whatever goes down really, really fast and really sharp comes up really, really fast, right? And the inertia actually propelled up way further than the resistance level that we've tested prior, right? And you could see that with respect to the prior resistance level, you could basically look at it. It's basically an up staircase up and away. It's all green without any consolidation. And that shows that this is a lax substantive consolidation level, which subsequently drove the sell-off, right? And that's exactly what happened, right? Immediately after hitting this peak of $29,994.72, we immediately sold off, and whatever goes up really, really fast again, we comes down really, really fast again, right? You could see a lot of emotions in play here that is obviously showing and illustrating in this chart. And ever since then, we sold off even more. And by one point, we're hitting at the rock bottom on May 23rd, hitting that 1731, right? And ever since then, we've been kind of consolidating on a sideways fashion right now, right? And per my video yesterday and my videos before, I think right now is a perfect opportune time for you to, maybe apply a methodology called the swing trade method. Because of the fact that we are consistently testing these walls here, right? And these walls, like I can define here, the top would be basically around like the 1750 as the top of the ceiling. And with respect to the floor, right, will be somewhere around like the first floor of the $2,450 level and the basement floor of the $2,100 level, right? So if you think about more of like a short-term investor perspective, I think buying at the $2,450 level, dollar cost average, or buying at it most significantly at the 2,150 or the $2,000 level would be a great level to buy up and then sell at the top, about like the 2,750 level, right? Because like we are gonna continue to trade sideways as the MACD is slowly fusing right now. You could see closely, you could see that the RSI is currently, not overly bought and not overly sold, but MACD is currently crossing with a more propensity to cross downward at the moment. So I do foresee as more selling pressure, right? And that's just a normal course of cadence. We're going through something called the mini cycle right now. So you just need to come back down to the 2,450, which I believe that earlier this morning, as I woke up about like 7 a.m. this morning, we did hit that point at one point, but immediately got bought up. So I believe we were way below that like 4% mark. I think we were down about 5% at one point earlier this morning. That immediately got bought up, and which is the reason why you see this like mini candle here, right? So people are doing something that is a very logical thing. We're basically psychologically anticipating or contemplating on the next step right now until we get further catalysts around obviously the global adoptions, the utilizations of Ethereum 2.0, and we hear more positive media affectations around corporate purchases for Ethereum as well, right? So these are things that we still need to hold on and hold off. But if you believe in Ethereum in the long term, as more corporate investors further adopt, the price point for Ethereum is going to go upward from here. So this is just a matter of contemplation at the moment. So if you want to swing trade this would be a great level. But if you want to hold this for a long term, I think that again, right, the 2,450 or the $2,100 level would be a fair price point for you to get in. All right, just to recap all the numbers that we just talked about today, right? With respect to Ethereum first, I think the fair number for you to swing trade or start building your position there would be like the $2,450 level, assuming 5% of corporate adoptions, right? And if we even get down to like the $2,100 level, that's even more attractive, right? Because that's a true psychological market resistance level, right? Anywhere around the flat numbers is always a great market level for you to buy in, because those walls are very, very difficult to crack, right? But if we crack that wall, going back to the 1750, that will be a black swan event, and also that will be a great opportune time for you to load up from that level, right? And with respect to my 12-month price target, again, right, I'm assuming corporate adoptions of 20%. And subsequent to that, in a calculation, you'll see the sensitivity analysis that you'll get down. You'll basically get the price point of Ethereum per Ethereum around like the $9,500-$9,800 level, right? So if you're buying at the 2,450 mark, they'll subsequently generate 4 times your money from here. So that's it for today with respect to my technical analysis. I really appreciate you guys for dropping by. Hope you guys have more clarity and transparencies around the trades that we're looking at, right? These cycles are supposed to happen. There's logics and psychology behind the price fluctuations that we're seeing. And I think with respect to this mini sell-off that we're seeing across the cryptocurrencies market is logical and it makes sense. And we kind of saw it coming based on my previous videos, right? So hopefully you guys don't get so scared and stay calm and stay collected with logics and applications of just try to understand the causation effects between the two, right? And hopefully you guys gain some insights out of it so you could execute the trades in a more strategic manner going forward. Please hit the like button, also the subscribe button, also the bell notification to watch out for the next video coming up. Take care.